Hi everyone, Grinny here, and welcome to my channel. So we're going to take a look at Bitcoin today, and of course, by proxy, the rest of the crypto markets, because we appear to have signs of a major move soon. Whether that is up or down will really depend on what happens on the 26th when the US FOMC meeting happens. Now, one of the things that you would notice is I did not make a video during that massive upside that happened a couple of days ago. And the reason for that is during a bear market, you really don't want to overreact with price movements that are in lower time frames. So let's dive into the charts just to see what I'm talking about. So what I have here is I have the chart of Bitcoin on a daily time frame. And if you notice, this particular move right here that started on July 13 all the way till now was roughly around a 25% move for Bitcoin right here. That caused a cascade of a lot of market upside for everyone, including our gaming cryptos, of course. But it's very important to put things into proper perspectives. After a triple bottom pattern, there was a breakout right here. So this particular price level of around 21,724 was a key price level that had to be broken so that you can have a bullish continuation. That has, of course, happened. But once again, it is very important to consider that over the past couple of days, we have been consistently rejected over the 55 EMA right here, currently standing at around 23,764. Looking at Bitcoin on a weekly time frame, when we overlay the 200 weekly MA right here and the 300 weekly MA right here, once again, Bitcoin is currently sitting above the 200 weekly MA right here. The weekly MA currently stands at 22,712. We are currently $200 above it. However, once again, if you notice the wicks right here, one important thing about price action is when you look at the candles, it's very important to remember this saying. The bodies, the candle bodies, provide the structure, but the wicks tell the story. So one of the things to note is we really have been rejected quite significantly here. And if you notice the last two times that it happened, it did signify a major move to the upside first before we bounce back. This particular wicks right here, for example, was a signal that we are going down further. This particular wick right here, signal that we are going down further. These particular wicks right here, these upward wicks, signify a rejection point. And from here, we will continue most likely to go down. So from a structural perspective, what can potentially happen then for Bitcoin and in proxy the rest of the crypto markets? The first key question to answer is, how do we know that this is not just an ABC correction and we are over this particular structure and we can continue our bullish continuation instead of what I've been saying recently, that this is actually a 5-wave move to the downside or an ABCDE pattern from an Elliott wave theory? This is why I'm fairly confident about a 5-wave structure instead, of course, of just a typical ABC correction. When you have a C-wave correction, the end of that C-wave correction has to fall in line with the wave 4 low right here. So when you go back to the Bitcoin charts, this is the wave 1 right here, this is the wave 2, or this is the wave 2 if you exclude the Black Swan event. This is the wave 3 that led us all the way to 64,000, followed by a correction, which is the wave 4, followed by the wave 5, all-time high right here. So according to the guidelines of Elliott wave, this has to hold in order for continuation to happen. Unfortunately, this particular structure right here of around 28,877 was broken. So this is how we know that this is not just a mere ABC correction right here, and we are on our way to a 5-wave move to the downside. Historically speaking, when we also go to the 2013 cycle right here, after the 5-wave move up, so I can show you that right now. So after this particular cycle, you have wave 1, a flat wave 2, and I will showcase why this is a flat correction. Wave 3, wave 4, and wave 5. It was followed by what? A 5-wave move down, where this is your wave 1 right here, this is your wave 2, this is your wave 3. You had a flat wave 4 right here before the eventual destination of our wave 5. So there are two counts, both historical and both guidelines for Elliott waves, that really signify that we are currently in a 4th wave before the eventual 5th wave. How deep will that 5th wave go will depend, of course, on what we see from a chart's perspective. The other thing about Elliott waves is typically the wave 2 and the wave 4 behave very differently. If wave 2 has a sharp style correction, wave 4 tends to have a flat style correction, and vice versa. If wave 2 had a flat style correction, wave 4 has a sharp style correction. And there are a number of reasons for that, of course. Most of it has to do with price action consolidation etc., etc. But when we actually overlay that principle with currently with a Bitcoin structure, we did have a very prolonged sideways correction right here, which signified our wave 2. Look at the wave 4 then. It was very sharp and very quick. If we apply that same principle to our 5-wave bear market move to the downside, what you can see here is our wave 2 is fairly flat. So the expectation that we may see here is our wave 4 will be quite sharp. If this is the start of the wave 4 right here, then expect that there will be some more upside candles that are directly like this, but eventually we may get rejected and have finally our wave 5 destination to the downside. So now that we have the structure in place, and now that we have mapped out the high probability structures here, what can we do moving forward? Now, it really depends on your current situation. So let me tell you my personal situation, maybe you can act from there. My average Bitcoin price, which I will just hold because this is pretty much my retirement fund, is around $36,000. So roughly, I am around here. So my average buys, if you notice, were really structured around the 2021 capitulation. Because I have an existing position in the market, this is very unattractive to me because if the market really bounces back from here, and this is the last bottom right here before we move up, either because the global economics are much better now, which I doubt. And of course, you can always invalidate the structures at play. So even though we're in a 5-wave situation, if we break this particular price level, then this whole structure is invalidated and we are forming new structures. This fall right here is only at around 37%. At 37% for the crypto space, that is particularly nothing. So what I've been doing is I've been saving up a cash position, and it will only be employed when the price movements down from my personal average is much lower than this particular price level right here. One of the things to notice from a structural perspective, like I mentioned in my previous videos, the potential destination of the wave 5 is currently at this particular support level right here, between $11,000 and the 8,000 level, or somewhere around this particular level. So the cash position that I'm currently employing, if it goes down to here, if you notice, my average price now would range all the way down to around 71%, making it a very attractive proposition for accumulation on my end. That is my personal position at the moment. I will only get into the market because I have an existing position if price levels are very attractive. However, for the rest of you, for example, if you have no existing position in the market, then of course, this is currently a very attractive low-risk proposition that even though it goes all the way, let's say, to 10,000, it doesn't really matter because this particular risk level, as compared to the upside gains that we will have for Bitcoin and the rest of crypto, is in a very attractive state. Not financial advice, of course, but this is pretty much a massive DCA zone personally anyway, if I didn't have a position in the market. If I found myself buying all-time highs, for example, then even at this level of around 60% down, then this is a good way to really lower that average price. If it goes down, then of course I will continue to lower the average price right here. Before we end the video, another key thing to note is the current behavior of Bitcoin is actually contrary to the stock market, but not what you think. So remember what we talked about where wave 2 is, this is a flat wave 2 structure, and this appears to be a sharp structure before the continuation down. When we go to the stock market, it's actually reversed. So this is S&P on a weekly time frame. And if you notice, we had a sharp wave 2 correction, but we appear to have a flat wave 4 correction right here. The Nasdaq as well is exhibiting the same behavior. Sharp wave 2 looks like a flat wave 4. Given this particular bear market, we really have to be more patient because what may be happening is Bitcoin may be signaling where the potential markets, all asset classes, will eventually go. If we start to see a sharp upside followed by a very flat rejection and the beginning of the wave 5, then this is really the opportunity of a lifetime for us to accumulate everything that we need before the subsequent continuation. So as a final point, patience is key, and have a good summer. Yo, before you go, like this video, subscribe, and share this video to your friends. Thank you very much and have a good day.